public utilities, or profit engines. Water sector's crisis demands urgent reform. For decades, England and Wales held up water privatization as a model for infrastructure investment and customer service. But the dam has burst. According to a recent report from the Environment, Food and Rural Affairs Committee, the water sector is now failing, with leadership that's deaf to the crisis, deteriorating environmental performance, and a financial model that's structurally unsound. More than 70% of the industry is now owned by overseas investors, many operating opaque, debt-heavy holding structures. As a result, the sector increasingly resembles a web of financial vehicles, dispersing dividends, loading debt, and issuing executive bonuses, rather than a collection of utilities safeguarding a vital natural resource. Mounting public outrage and environmental damage. Pollution from storm overflows, declining water quality, and high-profile failures like the cryptosporidium outbreak in Devon have amplified public anger. This is compounded by revelations that billions in customer payments have funded interest and shareholder dividends rather than infrastructure upgrades. At Thames Water, for instance, over a quarter of its revenue reportedly goes to debt servicing. Executive bonuses continue despite regulatory penalties and company underperformance. Such practices have eroded public trust. And yet, frontline workers who remain dedicated to delivering essential services are caught in the crossfire. A crossroads for regulation and ownership. The committee's recommendations call for a radical rethinking of the sector's foundations. This includes enabling OVWAT to veto unsuitable company owners and executives, capping and clawing back excessive dividends and bonuses, overhauling the price review process to prioritize long-term resilience and transparency, considering alternative ownership models, including not-for-profits and community interest companies. The water sector's historic reliance on debt, once seen as a tool for capital investment, has now become a liability. Some companies are operating at a loss, and the public is being asked to foot the bill for decades of mismanagement. Rebuilding trust and resilience. What's ultimately at stake is public confidence in the stewardship of a critical natural resource. The report underscores the need for low-risk, low-reward financial incentives and a renewed social contract between water providers, regulators, and the public. But is reform enough, or is it time to reconsider whether essential services should be traded in financial markets at all? The summer 2025 report from the Independent Water Commission may hold the key to this question, but one thing is clear. Without decisive action, the water sector risks drowning in its own contradictions. You've been listening to Sustainability Soundbites from E+E Leader. For more information on sponsorship opportunities, reach out to our team today.